It's looking very interesting now for Platinum. First off, read this disclaimer carefully. Like, sub, share, and comment. We will go to natural resources. So Platinum is one of the precious metals that it is very important, but it doesn't get that much attention. So here you can see the distance from the 52-week low. It is, outperforming gold. That's interesting. Not too shabby as far as the 52-week highs either. Okay, so we will look at Platinum in two ways. One is that we will look at the Platinum futures and also a Platinum ETF, technically an ETN. That's the PPLT, Aberdeen Standard Platinum Shares ETF. So this is the unleveraged way to trade platinum, because getting into the futures market is really like, it is not for beginners, nor is it really for intermediate. That is very advanced. Let's first look at the seasonality of platinum. So here we are looking at the last 20 years, the percentage of months in which platinum closes higher than it opened. And we can see clearly that December is a decent month, but it really gets interesting here in January and February. Hence, the beginning of the year is really strong historically for platinum. If we go further back in time, between 1990 and 2009, you can see that January and February are some of the strongest months. So strong months, looking really at the big picture. So let's now look at the charts. Okay, so you can see here that platinum futures, they have been in, a quite significant bear market, and has not seen the kind of recovery that we have seen in gold, and also to an extent also silver. So let's quickly here look at gold just for comparisons. Well, yeah, let's do it this way. So here you can see gold, nice recovery. Look at SLV, the silver ETF. You can see that silver has really, it's quite far away from the highs, but it is emerging. But you can see here with platinum, it is much weaker. But the distance from the low is actually pretty decent. So there are multiple patterns in development here. One thing is that we do have this rounding bottom formation, which works like this, is that you have this smoothing action where the bears are in control, and then you gradually have bulls gaining leverage. You could make the case that this looks like a capitulation low. So it is possible that this was the low for platinum. If so, then that was the end of a bear market, because the bear market was actually pretty substantial. If you measure from this high here all the way down to this low, minus 70%. That's big. So we do have this rounding bottom, potential rounding bottom in development. That's a bullish pattern. And you also, if we zoom in, we do have this inverse head and shoulders pattern. So here we have a bit of a messy left shoulder. Here is a bit of a messy head, and then you have a right shoulder here, and you see that we are breaking out. That further strengthens a bullish thesis. You also here have this red 200-week moving average, which is smoothing out. It is still pointing somewhat downwards. It is negative, but it has gone from being very bearish now to becoming more positive. If you look at the correlation here with the S&P 500, it is only actually 40%. Let's now go to the daily data points, like that. Let's load the data. Let's actually zoom out a bit. So here you can see, this rounding formation in much more detail. And here you have this inverse head and shoulders pattern. It is messy, but the key thing about an inverse head and shoulders pattern is not obsess too much about, it having this surgical one shoulder, then head, and then the right shoulder. That's not really the point. The point is that you first have a pullback that is bought, then you have a deeper pullback that is met by a big rally. And then you have the second attempt from the bears, which is unsuccessful. Because that's the basic key thing about the inverse head and shoulders pattern is that right shoulder. Because if you are a bear, if you want to short platinum, and you see this happening, and then you see this, see the bulls starting to buy, you know that this is way higher than down here. So obviously, if you are a bear, you get spooked. So the key essence of these patterns is the psychological effect. The same thing with the rounding bottom. Like, put yourself in the bear camp. You want to short platinum like there's no tomorrow. And then you look at this chart. And then you see, objectively speaking, that the bears were in control. And now you see that there's some kind of change in the air. And the recent developments, they scare you as a bear. You look at this and you're like, I'm not sure about this one. And when the bears start to get spooked, that's when the buyers overcome them, and then you get an uptrend. Okay, let's now look a bit here at the correlation here with the ETF. So let's take platinum here in the back, to do the correlation. Platinum futures, like that. Unsurprisingly, there's a perfect correlation between platinum and platinum. PPLT is the ETF. So long term, there's a 99% correlation between the futures and the ETF. So basically close to perfect. If you go here to the daily data points, you do see that there's a 98% positive correlation. So up here, it was all up towards perfect. It has... you see that it's actually quite recently that there's been a bit of a decoupling, but still, 98% positive correlation, it is very good. So it's not a problem, okay? No problem. Okay, here you can see the performance of the Platinum ETF, minus 2% year to date. You can see here, if we go here to the ETF database, you see that the expense ratio is 0.60%, which isn't actually that bad. I did worry that the expense ratio would be much higher because there's not much alternatives if you want to get this kind of exposure to platinum. So that is actually pretty good that they didn't like pump up the ratio. Let's look a bit at the fund flows last 6 months. See that there's been a lot of buying, a bit selling recently. Okay, so to sum up my take here on platinum, I think, long term, given the technicals and some of the macro factors surrounding platinum, at least looking, forward, I find it hard not to become bullish. I find it harder to become bearish than bullish. Looking at the coming months, I do think that this looks interesting. This looks very much interesting. There's the inverse head and shoulders pattern, which is bullish. You do have a rounding bottom as well. You have, on the weekly data points here, you have this key breakout from this red 200-week moving average. You have it smoothing out. The stars are certainly aligning themselves for the bulls. On top of it all, January and February are some of the strongest months. Well, they are literally the strongest months here for platinum. And that's over the last 20 years, okay? So this is not like the last 2 years, the last 20 years, okay? So basically, things look good for platinum. If the bears do get back into the business in a big way, then they would need a lot of catalysts to break this, break all of these factors that are benefiting the bulls. Okay, whatever you do, of course, you want to be very careful in this market and try to be as market neutral as possible in your overall portfolio, because there's a lot of uncertainties.